Today, we're going to talk about qualifying for a USDA loan if you're receiving child support or alimony as income. Now, this can get a little bit confusing. So, first of all, a USDA loan is not a loan that everybody will run into. USDA, it sounds like the people that regulate your food and your meat and things like that. And it's also called a rural development loan. So it sounds like you have to live out in the middle of the country. It's not exactly like that. There are populated areas that use USDA loans. I suggest if you're anywhere in middle America, if you're in a suburban or close to a big city, you're probably not going to qualify. But if you're out in the boonies a little tiny bit, or if you're anywhere in middle America, there's a lot of areas that allow you to use a USDA loan, which means no down payment, 100% financing at really aggressive government loan terms. Listen, divorce is never fun, and child support, if there's kids involved, that's tough too. But today I want to try to help you get back on your feet, get into a house, and I'm going to show you how to use the child support and the alimony. Because most importantly, I don't want you to go to an inexperienced kid in a call center and have them tell you that you can't do it. So I'm here to show you that you can do it and what the terms are. And so let's not delay. Let's start. Income documentation. So first, that's what all of this is. Child support and alimony is a form of income. It's just like a job or something like that. So it's income that's coming in. And so that's how the underwriters are going to treat it. But because of the nature of how the alimony is calculated, how it's paid, how the payment of it is enforced, it makes things a little bit different. So what the underwriter is going to look at, they're going to look for a continuation of receipt. They want to know how long you're going to be receiving that income. They want to see a history of receipts. So they want to know that you've already received that money for a certain period of time. So we're showing you a history of you receiving that income, and then we're showing that your probability of receiving it into the future is good. So those two things. And then the last thing is the calculation of income, which is how do you calculate alimony and child support? And I got a nice little surprise for you on there. It actually works in your favor. If you have court ordered payments from the court, from the divorce court, the underwriter, in order to qualify for a USDA loan, is going to require that you've been receiving the payments for 6 months. Now, conventional and FHA, I believe, are only 3 months. I did those videos. Go back and watch those videos. So this is a little bit longer. So you have to have received it for 6 months, and you have to be able to prove that you are going to receive it for at least the next 3 years. If you're getting voluntary payments, like if it's not court ordered, your ex just agreed to pay you and they're just paying you without any court ordered enforcement, you have to document that you've been receiving it for 1 year, and that it's going to continue for 3 years. Now, most likely the 3 years part is how old are the kids, right? Or if there's voluntary payments, what was the divorce decree? What was the agreement? If your kids are 18 and 19 years old, that's going to be really hard to prove that you're going to continue child support for 3 years, maybe alimony. So this is another reason why USDA gets a little dicey, is because some of this stuff, these guidelines are a little bit looser, and there's a lot of underwriter discretion that's going to come into this. So the underwriter is going to analyze this, especially if you have voluntary payments. If it's not court ordered payments, so you almost always want to get a court order or get some sort of an attorney or get some sort of legal document, an agreement between you and your spouse. Because if you just have voluntary payments and they're spotty or they're not consistent, or the amounts are all over the place, there's a good chance that an underwriter could take a conservative approach at this and not let you use that income. And we don't want that. Consistency of payment. We need to support that meets a minimum history, but the payment amounts are not consistent. Must use an average consistent with the payer's ability or willingness to pay. Now, as you can see, let me say that in English. Basically, what this is saying is, if you're not receiving consistent payments, the underwriter can take those payments and average them over a period of time to get a payment amount that's consistent with their ability or their willingness to pay. So if they've been paying you $500 a month and then they paid you $700 the last 2 months, the underwriter's probably not going to use the $700 because it had been $500 for all the time up to there. And then it went up to $700. So they're not going to just give you the $700. They're going to look at it. They're going to see what the payer's current ability and willingness to pay. I have no idea, to be honest with you, how you determine the payer's current ability or willingness to pay. I don't know if that's a letter. It might be a letter from your ex that states what their intentions are. Again, this stuff is these aren't black and white guidelines. That's why I do these videos, because the chances of you getting it, if you talk to 5 different loan officers about this, you will probably get 5 different answers. Maybe that's why I'm doing this video, is so that you can see that there's some room for interpretation here, and there could be some complexities. The other loan programs are not quite as flexible as this. Like, they won't let you use voluntary payments without a court order, especially if they fluctuate. They're not going to be happy about that. So again, this is a little bit different. The documentation options. So how you document these things, you can either use a final divorce decree, a legal separation, a court order to document the terms and the timelines. Also, you have to show evidence of timely receipt and consistent amount for the required history, which can be bank statements, canceled checks, deposit slips, tax returns, anything like that. So you remember in the beginning, we said you have to show that you've been receiving it for a year. That's what you're going to give the underwriter. You're either going to give them bank statements showing that the money was deposited. I've even seen situations where cash was given to the spouse, and they were depositing it into the account. Like, those amounts need to balance. Like, if you know the support is a certain amount, you need to see that exact deposit around the same time every single month in order for them to use it. So you have to document the receipt of the support over time. Now, the calculation of income, this is where it gets cool. So once you determine that you can use the income, once you determine what dollar amount you can use as the income, now I want you to check with your CPA or your accountant on this, but determine the taxable status of your eligible support payments, because child support and alimony is usually not taxable to the person that receives the child support and alimony. So if you're the one that's receiving the child support and alimony and you're exempt from paying taxes on that money, you can gross up that dollar amount by 125%, or gross it up by 25%, which means you multiply it by 125%, which means that you're actually going to have a little bit more than what you actually receive is going to be contributing to your debt to income ratios, which is absolutely phenomenal. Now, again, as you can see, these aren't black and white guidelines. There's a lot of room for flexibility in here. There's a lot of room for interpretation. So it's so important that you work with an experienced mortgage professional. And the reason I'm doing these videos is not to give you the ABC 1, 2, 3. If it was that easy, almost anybody can do it. Most of these underwriting guidelines, especially when it comes to variable income type of guidelines, inexperienced loan officers will not have a clue, especially when it comes to USDA. Very few loan officers understand USDA guidelines, and most loan officers will not even recommend USDA. Just because they're not trained in it. It's a little bit different from all of the other programs. And so a lot of loan officers don't understand it. They don't want to understand it. They don't try to understand it. But I'm telling you, you want to understand it if you think you may be eligible, because it's a no down payment loan anywhere in the country. Almost anywhere in the country that qualifies. If you have more questions about what qualifies on Find My Way Home, actually on Find My Way Home, I have all of the links to be able to find. You can put in an address and you can find out if the property that you're trying to buy qualifies. I'll actually get that link and I'll put it here in the description on the YouTube channel so that you don't have to go to the website just to look up to see if the property is available. But if you're not working with a loan officer, or if your loan officer isn't familiar with USDA loans, then please come by findmywayhome.com. We have an expert network there of mortgage professionals from across the country that love to help folks with the difficult challenges. Most of these people have decades of experience in the mortgage industry, and really they just like helping people with the stuff that the call centers won't even touch. So if you go to the website, you can search by state and reach out to somebody. Now, every loan officer on our site should have a bunch of content, a bunch of videos that they've produced. You can watch their videos, get to know them, and if you like them, reach out to them. Or there's a form on the site that you can fill out, and there's a link here in the description as well, I believe. And you just let me know what your situation is, and I will match you with somebody on the network that I know and trust that can help you. So that's it for qualifying for a USDA loan if you're receiving child support or alimony. Again, I did videos for Fannie Mae, Freddie Mac, FHA, and VA. So don't stop your search here. Uh, Look at FHA is also pretty flexible, and it's going to be available anywhere. There are no restrictions with FHA other than maximum loan amounts by county. So hopefully that was helpful, and hopefully that makes this a little bit easier, and we are able to help you find your way home. Thanks for watching. We'll see you next time.